Hi traders, this is Chris from Elite Currency with the update on the euro dollar and pound dollar. This is the euro dollar 4-hour chart, and yesterday we had a break to the upside here, a break above the 21 EMA, and it lasted for a little bit, but ultimately didn't manage to break this resistance zone and is making a retracement back to the downside. I think that looking at this is looking like a pullback within the breakout, so we're looking at a break pullback continuation, which is why at this moment we thought it was good enough for a long setup, which we took on the ECS Live. We're in that trade at the moment, and let's see how it goes. We took it at the bottom here at the turning spot, so let's see if we get the upside or not. You never know. Each setup is an individual setup that can be a win or loss, and it really doesn't matter. We're always looking at the long term. We're looking at 40, 50 trades at the minimum before you can say anything about that track record, right? Otherwise, one setup really doesn't mean anything for you or your strategy. So it looks like a pullback, and maybe, just maybe now, finally the break above the 21 EMA, we will see a bigger kind of push. We already had a couple of breakouts here, of course, 1, 2, this is the third, so this would be the fourth. The more breakouts opportunities, typically the further price will go. You see the third went already a little bit further than the first and the second. The third went already for about 85 pips. So I think that from a wave perspective, this is still looking like momentum, all right? And this looks like a correction to me. This looks like momentum, this looks like correction, and this looks like momentum. So there are two scenarios in my view for those that like wave patterns. Either this is a wave A here, and we're looking at a wave 1, 2 of a wave C here, or this is wave A, this is wave B, down we go for wave C to finish a bigger wave ABC within this blue AB, and up we go for wave C. So one scenario it sees this as a pullback for more upside. The other sees this as a pullback for more downside to challenge the bottom one more time and probably bounce. If it breaks, of course, through this bottom, then we might be in a downtrend, and that would totally kind of change the whole perspective of this chart. All right, but for the moment, I'm still seeing this as a potential bigger bullish correction, and that still stands as long as we stay above 112.50, I would say. All right. So that depends on how price responds, I would say, to this resistance zone and this trend line. So if it breaks above the 21 EMA, we're looking at a bullish breakout. If we break below the trend line, specifically these bottoms, of course, then we might be seeing a little bit of a bigger bearish correction. In that case, this could still be all maybe an ABC like this, and then we'll see one more leg to the downside, all right? Or even a triangle, A, B, C, D, E, for instance, like this. But, I'm getting maybe a bit ahead of myself, but that could be possible too, and then it breaks to the upside probably following this momentum. For the moment, though, in our view, the upside is more likely. There's also more space to the upside. So even if it's 50-50, down or up, if you look at the space, then there's more to the upside. Let's put a fib from here to here. And the next target is 115.40. But maybe more realistically speaking, if it starts to break above the 21 EMA zone on the daily chart, right? Because here price has respected already the 21 EMA zone for quite a while. 1, 2, 3, 4. This would be the fifth attempt, or fourth attempt maybe, depending on how you count. But yes, there's a lot of space then to the next resistance zone up in here at 117.50. The target at 115.50 is the most likely, of course. Then each target gets a little bit less likely, but there's a big space there considering the current price action. So, it's around 114. So yeah, 150, 230, 350 pip zone to the upside. Whereas if you look at the target to the downside, as I said, 113 is the support zone we're looking at. That's just a few pips away from here. So even if it does break to the downside, that's a very, very small space. So if you look at the reward to risk ratio, lots of more potential to the upside. And even if it's 50-50, therefore, just from an R to R perspective, the upside looks better. Also, a lot of challenges of this 21 EMA zone. Momentum here, once again, the patterns themselves look like up, correction, up. So I don't think it's 50-50. I think the upside has a slightly better chance, despite the fact that that is a reversal kind of a trade idea. With the trend is still down. But due to the patterns, I think that a reversal at this moment is a little bit more likely. So taking those two factors into account, it looks better for upside. The confirmation of that would still be, if you really want a confirmation, a candle close above the 21 EMA, which we didn't get the last couple of days. There were wicks pushing above it, but we never got a candle close above the 21 EMA zone. That's what we're looking for as a confirmation. A candle that can close above that like this would confirm it, wait for a bull flag the next day, and a breakout continuation up to the first target at 115.50. All right, 115 is a little bit of a round level too, but ultimately I think the fib targets will work, and price will go to these one of these three targets most likely. All right, so let's take a look at the pound dollar. That had a big bearish breakout yesterday due to the Brexit news. There's a lot of Brexit news going on. There would not be any vote apparently in the parliament today about the proposed agreement between the UK and EU that May, the Prime Minister of the UK, had managed to negotiate with the EU. Didn't seem to get a majority backed by the UK Parliament members, so the vote was cancelled, and now she's going to renegotiate or talk again at least with the EU, see if she maybe can get different terms here that might satisfy the UK Parliament. Of course, if there's no deal voted, as you know, then there might be a no-deal Brexit. It's possible, maybe, just maybe, a second referendum, although that doesn't seem likely at all at this moment. But never say never, I guess. But statistically, seems very low probability. So it's either going to be a no Brexit probably, or the Prime Minister has to find a way to get a deal that is interesting for the Parliament members, or at least the majority of them. So a lot of insecurity, and the pound reacted to that, fell to the downside here strongly, broke through the support levels we had on the chart, and ultimately broke this falling wedge to the downside, broke the correction pattern here to the downside. And that, not very surprising because it's Brexit news related. So this correction was probably created via Brexit and a break via Brexit. All right. Ultimately, the chart pattern itself looked like a falling wedge and could have been a bullish pattern because of that, and a break of that wedge could have led to an upside. That didn't happen. It didn't break, so we didn't get a confirmation of that. And of course, the Brexit news is the leading kind of element here, aspect of price for the pound, at least at this moment, and specifically the pound dollar. So with that break, it looks like more continuation is likely, but with Brexit, you never know, I guess. For the moment, though, from a wave pattern point of view, it does look like an ABC correction has finished, and this could be the start of a downtrend. And if you look at this, we'll be looking for a wave 4 and a continuation lower within wave 5. But all of this is very, very risky to trade, just because, once again, of those negotiations taking place. And but if this would be a standard chart in standard usual times, I would say let's put a fib from here to here or from here to here. Let's wait for price to hit one of these fibs, and let's wait for a turnaround and a break maybe of any support trend line. Not that we have that yet. Maybe on the 1 hour chart we have it a little bit. So if it retraces a little bit deeper, then breaks below the 21 EMA again, or breaks below the support trend line, that would typically be a wave 3, 4, 5 breakout, and that could be an interesting trade to trade. Usually, right? These times are risky, are more difficult, and just avoiding the pound dollar in general is a good idea. And trading it, if you do trade it with lower risk, would be appropriate as well because of the higher volatility regarding the news events. All right, so be careful of that. But that's what I typically would expect if it would be a normal time. Retracement into or just above the 21 EMA, and then a break below it again, and we should see one more lower low that could push below that 125. Target minus 272 target is at 124.40, minus 61.8 target is at 123.50. All right, if you're interested in how I do the analysis with these moving averages, there's a specific system and strategy and method behind that. That is called ecs.SWAT. It's developed by myself, and you can check it out, elitecurrency.com, for that method. You can also check out Nanet's method, the ECS CAMAC-D style, or our live setups, which is called ECS Live. Wish you all good trading in any case, and talk to you soon. Cheers.